Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to Crypto Republic, bringing you updates every day at 1:30 and 7 p.m. Eastern Standard Time. Just a quick reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. As always, thank you to everyone who supports the channel. Liking the video and subscribing really does make a difference, and I love reading everyone's comments and answering. With that said, let's break this down, because this is one of those weeks where nothing looks explosive, but structurally, everything is shifting underneath the surface. As of this morning, Washington is still dealing with delays, reschedules, and uncertainty. And by the time you're watching this, some of these details may already be moving again. That's exactly why this matters. Historically, the biggest changes never announce themselves with fireworks. They show up quietly. No headlines, no excitement, and months later, people look back and say, wait, that was the week everything changed. This week feels like that. We've got a real update on the Clarity Act. Democrats are still engaged, amendments are moving, votes are lining up, and even if the timing isn't clean, at the same time, crypto just came off one of the worst ETF outflows weeks in months. And yet, XRP is behaving very differently. I want you to think of it like plumbing in a skyscraper. No one celebrates pipes being installed, but without them, the building will never open. Today, we're going to connect these dots most people are missing. What's actually happening with the Clarity Act, why delays don't equal failure, and what ETF outflows are really signaling, and why XRP is being treated less like a trade and more like infrastructure. Ladies and gentlemen, I'm not here to hype price. I'm here to explain structure, because price follows plumbing, not the other way around. If you get value from this, hit the like button, drop a comment. It generally helps. All right, let's break this down. ETF outflows. Let's follow the pressure. Let's start with the numbers. Last week, crypto funds saw about 1.7 billion exit, the worst week we've had in months. Here's the breakdown. $1 billion flew out of Bitcoin. 630 million flew out of Ethereum. XRP, 18 million out. Now, someone will jump into comments with percentages, and yes, that matters. Ethereum's outflows represented a meaningful chunk of total ETH ETF exposure. XRP is barely over 1%. Ladies and gentlemen, every market panic, there's a rule. Fast money leaves first. Conviction money leaves last. And when something doesn't get sold aggressively during a drawdown, that's usually where long-term confidence lives. In 2008, bank stocks collapsed. Gold barely flinched. Gold wasn't exciting, it was trusted. XRP behaving differently than BTC and ETH right now isn't about hype. It's about perceived regulatory survivability. Capital votes with allocation, not tweets. And that tells us something important. Ladies and gentlemen, the Clarity Act slowdown does not mean stopped. I want to talk about the Clarity Act. The loud headline is delay, votes pushed, markups rescheduled, timelines slipping. That sounds bearish. But here's the refrain. In Washington, delay usually means language is still being negotiated. The Senate Agricultural Committee, handling the CFTC side, delayed markup due to severe winter storms. Flights canceled, senators stuck outside D.C. That's logistics, not opposition. Washington has a long history of using silence as cover while deals are shaped behind closed doors. Bills don't die loudly, they die quietly. This one hasn't gone quiet. Democrats haven't walked away. Amendments are still being filed. Staffers are still working. When Social Security was debated in the 1930s, it was delayed repeatedly, not because it was unpopular, not because it was new. Delay isn't weakness. Delay is institutional digestion. See, the real issue, it's education, not hostility. One of the biggest friction points right now isn't opposition. It's an understanding. Let this sink in. It's an understanding. A lot of lawmakers are trying to regulate blockchain using legacy financial logic. That doesn't work. DeFi protocols aren't banks. Software developers aren't custodians. Infrastructure isn't an intermediary. In the 1990s, lawmakers tried to regulate the internet like cable television. Same mistake, different decade. See, trying to regulate DeFi with legacy rules is like using a paper map with GPS directions. You might eventually get there, but not without proper confusion. The encouraging part, they're asking questions now. They're learning in real time. And that's how real regulation gets written. Credit card amendments and why this matters. Now, here's the part most people skip. An amendment tied to this process focuses on credit card network competition, forcing large banks to offer multiple processing rails. And here's the political drama. Republican Roger Marshall of Kansas recently backed out of a politically charged provision that would force credit cards to compete on swipe fees, according to Politico. This shows just how high the stakes are, even minor. Amendments face real political pushback. Yet the broader effort to open payment rails continues, and Ripple is absolutely watching this closely. Like I say, ladies and gentlemen, if you make it to this part, I appreciate you. And if you make it to the end, the best candy's at the bottom of the Italian ices. So I couldn't be with you yesterday. I had business to attend to, even though I love being here with you guys every day. I was reading some of the comments, and everyone thinks that I repeat certain things. I get it, but I want you to understand something foremost, what you learn on the floor of the Mercantile Exchange. You do repetition over and over to the point that it becomes so mundane that it becomes boring. That's what financial discipline and Gucci clarity, being a financial mercenary, is built upon. It's doing the same thing every day, no matter what. I want to start with a statement that was made that I think is very, very important. There are foreign countries that are buying a lot of gold, and we believe that these countries will soon launch tokenized versions of gold as the competitive currency to the US dollar. CEO of Tether, January 26, 2026. Guys, this statement is unusually direct for a private sector executive. On its surface, it reads as a competitive observation about foreign monetary behavior. At a deeper level, it reveals something much more consequential, much more consequential. A private issuer of digital money openly framing its strategy about nation-state monetary conflict and framing its better casual than usual. But in this situation, it is neither casual nor rhetorical. It signals participation in a geopolitical, geoeconomic contest over the future architecture of money. Let this sink in, because this goes back to everything that I've been drilling into everyone's head every video when I go off on my tirades and rants. At the most immediate level, the meaning is straightforward. The United States and its aligned institutions are preparing gold-linked, stablecoin-based financial products to defend dollar market share against foreign entities that are building alternative monetary instruments. Let this sink in. This is massive, massive. We've been harping on this for 2 weeks. These foreign systems backed by physical gold and increasingly delivered through tokenized formats are designed to compete with the dollar, both as a store of value and as a medium of exchange. The dollar's is most of the U.S. Treasury market. Understand this. When you attack the dollar, you're attacking the Treasury market. In this context, gold-backed stablecoin function as competitive currency instruments, even when they do not carry formal sovereign status. The quote acknowledges the reality explicitly. It confirms that gold accumulation by foreign states is being interpreted as preparatory behavior for monetary issuance. It also confirms that stablecoins represent the operational layer through which the issuance is expected to occur. This is not a forecast framed in abstract economic terms. It's an assessment grounded in active market observation. We're seeing it every day by a firm position at the center of digital global equity. But monetary power has shifted. The second level of significance emerges when one asks a more structural question. Why is the chief executive of a private company discussing nation-state monetary strategies at all? The answer lies in the role that firms like Tether now play. Guys, stablecoin issuers operate at the intersection of capital markets, payment structure, and monetary transmission. Their products circulate globally. Settlement behavior shape currency usage at the margin. As a result, they occupy a functional position that was once reserved exclusively for central banks and sovereign intermediaries. I want that to sink in for a second. We spoke a few months ago about Bhutan gold-backed currency, Kazakhstan gold-backed currency. Now, do you see what's really happening here, everybody? The subjects that I am harping on every day, that I harp on every day in this part, that people think that I harp on too much, this is the main event right now. So had you been paying attention to all the things that I harp on every day for the time that we get to share with each other, and why the videos have grown longer and longer, and soon we're going to have that sorted out as well to make the perfect length for everybody. This is the main event. The Harry Houdini freak show is over. The diversions and distractions are over. Here is what's happening, okay? You got gold approaching levels that are blowing up, ripping off, melt your face off rallies. That's all I could say. People getting chopped up like Gucci. Normally, and this is not financial advice, normally people would look at the top to sell in, but to sell into this would be like going in front of a boulder. You'd get run over. You'd be cut up like sushi. I harped on what's happening because this is what's happening every day. Ripple introduced Ripple Treasury. Ripple is now 100% on the Western tranche side. They're betting themselves in by their ecosystem and their catalog of companies to be in the treasury market. The treasury is the US dollar. When you attack the US dollar, you attack the treasury market, okay? The collateralization of gold allows other financial instruments, namely gold, to be used for development projects on bank sheets. That's so massive that forget it. It's huge, okay? That's beyond enormous. Again, Hong Kong is building plumbing that allows gold to function like sovereign collateral, marking a decisive step towards treating bullion as equal to U.S. treasuries in global finance. Let this sink in because this is massive. Second, a rare U.S.-Japan currency intervention has revived Plaza Accord. I always harp about the Widowmaker, how important that is. We're going right now into Japan. Again, have you been watching every video? If you're brand new here, welcome to the Republic, welcome to the Wolfpack. You're going to have to go back and watch a bunch of videos how I harped on things because guess what? Today I'm tying it all in, all in. This is what we tell people that retain us in any capacity. What I harp on and what you're hearing. And if you found this place, I'm happy you're here. I love all you guys. Love you guys. Love sharing the knowledge we know. And this is not financial advice. Again, the Widowmaker, Japan. Japan currency intervention has revived Plaza Accord echoes. I'm not going to go into this because that is a true PhD class. Signaling the yen instability has become a systematic policy problem with global consequences. Hong Kong plans to let's start this over, okay? Hong Kong plans to let's start all of this over, right? Why I say let's start all of this over? Hong Kong wants to start over everything financially. That's what they want to do. They want gold to be the center of attention now, right? Not the U.S. Treasury, okay? Hong Kong's plan has finished completing a clearing system and has launched gold futures and testing. And it plans to trial the whole system in 2026. But they're already done it. They're already testing it now. They're going to deepen integration with the Shanghai Gold Exchange and expand storage towards 2,000 tons. That's massive. The officials there are framing the move as infrastructure, but the implication is larger. Guys, gold is being positioned for collateral use alongside sovereign bonds. Do you realize I harped on this for weeks? People thought that you want to go somewhere else to get the information? Go ahead. If you're here, thank you for being here. If you don't want to be here, unsubscribe. Love you all. When you want to come back and subscribe again, we'll still be here. Bye. Do you understand what we've been harping on is what is spoken in boardrooms and family office rooms? This is it. When I told you being a financial mercenary, I'm designed for this, and I love this because this is what you got to get every day to make your performance numbers for people that are counting on you, okay? This is where you learn to make alpha in situations that are developing. Like when I first went off on a tangent about the migrator and being in crop dusters and what happened with wheat. You're going to have to go all the way back to see that. Again, it starts to make sense, right? Hong Kong emerges as the bridge linking bullion markets to yuan internationalization and BRICS trade finance. Okay. But what we're seeing is a rare coordinated U.S.-Japan currency signal that has jolted markets as the New York Fed conducted a U.S. dollar-Japan rate check at Tokyo's request. That move strengthened the yen, weakened the dollar, and revived the Plaza Accord parallels. What that's meaning in English is it's signaling FX instability has crossed into systematic risk rather than the routine market volatility. All right? So Japan has become the front and center right now. It's like they're a student of U.S. monetary policy. If they make a mistake, we'll let them implode. Then we'll go help them. I mean, it's unbelievable, but okay. Because Japan's role is so important, and what's happening in Japan is going to mold American policy more aggressively, okay, going forward. And by policy, we mean a weakened dollar. They're going to weaken the dollar. We told you that this will be the year to print it to win it, okay? You're seeing everything happen right now. Well, the question is how to weaken the dollar, and that's all bullish for a lot of things. It's bullish for gold, bullish for silver. We believe it's bullish for crypto. Any outright owning of any asset is bullish, okay? But it's happening right now. And these are the things that we're seeing. And this is speaking for, myself and people that retain us is how personally this is gamed out and how it could come to this and how this could happen. And, it's unbelievable. So look at it like this. The yen weakens and what happens? The pound weakens. What happens? And what we have done is imagine that they could happen in coordinated fashion, that everything is being weakened. It's like a thread rolling through all of it. A river, if you want to look at it that way, if you want to look at it as a river. And that thread I'm referring to is Japan. Japan's debt is so big, it's massive. They're going to need to print more despite the debt because they can't afford to have their they can't have their economy stagnate right now. And so they must have inflation. They got to welcome inflation. They need inflation. I told you in the beginning, pray for inflation for Japan. Pray for inflation. Here it is. Connect the dots. They have to have inflation in order to continue to refurbish their economy. Okay? They need it. And to do so, they have to tolerate weaker bond market. They have to have weaker bonds. They have to tolerate a weaker yen market. But if this happens too fast, it could actually strangle their economy domestically. And if it happens too fast, the yen gets even weaker too fast. It's all about speed. And if the yen gets weak too fast, then they'll have to defend the yen. And if they have to defend the yen, how can they do that? Well, they can do that by selling U.S. treasuries. And if they're selling U.S. treasuries, then the dollar is going to get hit. And from the treasuries, they're converting them into yen. So buying yen with dollars is essentially what they have to do. And the U.S., well, if you take a whole bigger picture, if we're the U.S., well, where they sell treasuries, that makes our situation a lot worse and a big problem. So how do we stop them from selling treasuries and strengthen the yen, you might ask? Good question, right? They do that by weakening the dollar. You weaken the dollar, the greenback. So Japan's weak yen has to become an American weak dollar. It's the feedback system of financialization unwinding, okay? So as they worry about their own domestic problems in Japan, global problems get fought domestically. Then global solutions get untransmitted. This is where globalization's a problem, and you can see right now, you're going to have to rewind this, right? So it goes, globalization gets untransmitted, and it goes back to the host. And we are the host of the parasitic debt, ultimately, unfortunately. Again, let that sink in. We are the host of the parasitic debt, ultimately. And that is the treasury market, ladies and gentlemen. So what does that mean for us locally, you're asking? Well, I'm a U.S. citizen, and, we need to defend the treasury, and we defend the treasury because the treasuries are more important than the dollars. I harp on this all the time. So let's be clear about this. Treasuries are more important than dollars. Bonds are more important than dollars in the fiscal sense. If we get a credit rating downgrade, we can't borrow from anywhere anymore. If our currency goes down, if we get a credit rating downgrade, therefore reducing the currency before the bond market drops takes pressure off the bond like a safety valve. Again, so the U.S. government always opts for a weaker dollar to keep the credit rating and let the people deal with the inflation, right? Pass through. So faced with Japan, they're saying, oh, we defend our own currency, so we're going to weaken the U.S. dollar. How does the U.S. accommodate that? Well, yield curve control is one way. Quantitative easing is another way. And they're basically the same thing for our purpose, okay? And that's why people are moving into physical metals, gold, silver. It's not financial advice. That's why people are selling dollars, not financial advice. And it's crazy because even though we're trying to get a handle on this, it's unbelievable because Europe's going to have to weaken the euro. Whatever they do, they're going to be left out. And if they don't do that, China suffers. It's everything is interconnected with this, right? So if the yen gets too weak, we have to weaken the dollar to support the yen. If the dollar gets too weak, then Europe can't sell anything or do anything. It's going to ruin their economy. And if so, they don't lower rates, they're going to have one big problem with China because China exports a lot of good stuff to Europe. So if the euro stays strong, the yen drops, the dollar drops, and the yuan drops because it's an Asian currency, then they can't sell anything in Europe. So it's like when you start looking at it pieces, I have to say it's like, this is all crazy. And this might go over in one's heads, but you're going to have to go back and rewind this because this is really what's happening in live term. This is trying to make sense of this is why people retain certain types of people to be financial mercenaries for them, okay? Because this is what's happening in real time every day and people taking advantages to make alpha. So you get a whole situation understanding the world is financially tied together. How can you have two people say, I want to go this way, I want to go that way, And as the world starts to pull it in financial tethers, as the world starts to repatriate onshore supply, it also it also repatriates its money and payment centers and chains. And that means a shrinking of globalization at the financial level. And who benefits from globalization the most? Who does? The U.S. So they've got to weaken the dollar faster than they think in order to stabilize the world, in order to make the reduction in global finance stay orderly. And that's why gold is rallying relentlessly. It won't stop. It just won't stop. And that's why, on top of that, silver is going to the top, too. Ladies and gentlemen, I hit you with so much, you're going to have to rewind this and listen. Okay. So I'm trying to give everyone what they need to hear. And it's a lot, right? There's a lot. And I don't harp on things for no reason. I drill into your heads what was drilled into my head from everything that I'm looking at. I look at my charts, it drills into my head, right? That's the most important thing, and at some point, right? At some point, I believe, and this is my professional opinion, right? This is not a recommendation. The U.S. government's going to sell gold and revalue it. That's what we believe, okay? It's not recommendation. It could be gold at 6,000, 7,000, maybe gold at 20,000. We have no idea, but at some point, there's going to be a point where they will sell gold and at least hedge their own gold. And who knows when that's going to be? But that's what we believe is going to be. And the hedge could be too late. Gold is going to be too high and the world is going to be in collapse. Who knows? So right now, there's a lot of things going on. And it's so much to the point that you got to ask yourself, how do you make heads or tails of this? You make heads or tails of this by looking at everything's interconnected. To sum this up, Japan was the greatest student of U.S. economic policy, which was a student of European economic policy to certain points. Now it's all unraveling. So everything is connected, and that's it. Well, you got to understand something. They're going to have to weaken the dollar to rescue the 1 + 1 is 2. You're going to have to weaken the dollar to rescue the world. If not, you jeopardize Japan, and you can't afford that to happen because Japan can't afford to pull out of the world even a little bit because everyone's been using their free money to finance everything. Everyone can afford to an extent or another remove themselves from the global pie. We can't afford it the most. A lot of people right now just want to be long precious metals because it's the ultimate hedge about the catastrophes that we're discussing right now that I went over that probably you're going to have to rewind a lot to go over, right? Okay. See, being U.S. citizens that we are here, we're all long dollars. We have exposure to dollars. And if you're Canadian, you're not American, but you still have dollar risk. So we have to weaken the dollar to rescue the world because the world, if it's not rescued, jeopardizes us, ladies and gentlemen. Japan can't afford to pull out of the world a little bit. Everyone can afford to an extent or another to remove themselves from the global pie. We can't afford it the most. And so we're kind of a hostage here, unfortunately. Remember in the movie The Big Short where the guy's pulling the Jenga tower pieces out? The cool thing about The Big Short is even though they don't talk about it, they demonstrate something that I was taught in school about bonds, and I also saw later about bonds. That when you're looking at a portfolio of ranking bonds, AAA down, let's say triple C, right? The weakest tranche the weakest tranche has the most power. And when you pull the Jenga out, it collapses. And in that sense, the world is a Jenga tower, and we are the AAA up on top, or whatever we are, AA plus, whatever you want to call it. And the rest of the world is weaker under us. However, we're supported by the rest of the world. And if a triple C guy says, I want my money back, and then you start a bank run, a global bank run, the Jenga tower collapses. That was a lot to take in, ladies and gentlemen. Again, if you made it through that, I appreciate you. And I'll answer all questions about that, right? That's what's going on in offices right now. That's what everyone's talking about. In the 1800s, railroads couldn't scale until track gauges were standardized. Payments today are in the same phase. Cash replaced barter. Cards replaced cash. Digital rails replaced settlement delays. Every step felt threatening until it became normal. Senator Gillibrand read between the lines. Senator Gillibrand's comment matters not for hype, but for framing. She made 3 things clear. Digital assets have both commodity and security traits. That's why 2 committees are involved. Regulation must reflect reality, not theory. But the most important line, the U.S. cannot afford to push the industry offshore. I want you to think when Glass-Steagall was written, it didn't ban banking. It separated functions to restore trust. That's what's happening here. Not suppression, definition. Capital doesn't hate regulation. It hates uncertainty. I want to talk about XRP from speculation to infrastructure. Now let's talk XRP under current drafts. XRP aligns clearly with a digital commodity framework, placing it primarily under CFTC oversight. That happens, the 2023 Ripple ruling gains statutory backing. That's massive. Exchanges get clarity. Dual regulator risk drops. Institutional use becomes realistic. I want you to think of this analogy. Oil didn't dominate global trade because it was exciting. It dominated because it was standardized and regulated. That's how infrastructure scales. Ladies and gentlemen, XRP isn't the paint on the house. It's the plumbing. You don't notice plumbing until it works flawlessly. It's quite boring. That's when adoption explodes, okay? Why they don't break the structure. Now, honesty, these are the risks, and there are. Funding delays, possible shutdowns, slow rulemaking. Airplanes existed long before the FAA. Regulation didn't stop flight. It made it scalable. Crypto's walking the same path. Base case, slow progress. Bull case, faster alignment. Risk case, delays, not derailment. Well, here's the foundation moment. You don't pour concrete and raise a skyscraper the same day. The waiting feels boring until suddenly everything rises fast. This week doesn't feel exciting. It feels uncertain. But uncertainty is where positioning happens. And for XRP holders, this is a foundational moment. I want you to drop your thoughts below of what you think and your thoughts. We were always big with the Clarity deal getting done, okay? We'll see you in the next one. As always, thank you to everyone who supports the channel. Liking the video and subscribing really doesn't make a difference. I love reading everyone's comments and getting back to them when I have a chance. If you made it to this part, I really do appreciate you. Really do. That dissertation that I just went through is one of the countless type of phone calls I have nonstop throughout the day, trying to explain the Japanese FX situation from what I first learned of it. It's like a language I learned in the early 90s. That's why, to me, what do I tell everyone? Told the spread between CME and Shanghai was my compass, and what happens in Japan is the wind blowing where we're going. It's not going to change. They have a serious problem over there with their currency situation. We're in it, printed to win it. We're in it right now, okay? Japan, I told you we have to pray for inflation. You can go back. I don't know what the title was that I said of that video, pray for inflation, pray for inflation. We have to weaken the dollar but not destroy the treasury. A lot of things. But at the end of the day, everything that I was harping on, all the other videos, was up to this point. Gold is now going to challenge the treasury. Well, the rest of the world is going to try to see, do they really want to back on gold or the U.S. Treasury market? Who will win? I have my own viewpoint, but I'm not going to talk about this here because nothing I said is financial advice. It's only my opinion. It's only for educational purposes. It's not advice whatsoever. Okay? A lot of exciting things are going to happen right now. Why these events have to pay attention is why we are in the camp that the Clarity Act has to get done is because the world is moving to use gold as collateral instead of treasuries. So do you realize that that far outweighs the bickering, what goes on in anything financially? Oh my God. It's so crazy what's happening right now. And that's why I said a villain needs to be. Who's a villain, right? Your mind. My mind is the only villain when you're involved in finance for yourself. It will tell you the most unkind things about why you did something. Challenge your own mental clarity, your Gucci clarity. This is where you have to have Gucci conviction, Gucci clarity, and you have to have perseverance because learning to survive in this financial war is why I loved being a financial mercenary. You heard the same things every day and you took advantage of them every day. And the things that you heard every day and you took advantage every day led to different paths to make alpha because the stories basically were like a river and most rivers lead out somewhere to open water. You follow them and it leads you to a lot more opportunities. But everything comes from, I said in Asia, follow Japan. Japan sets the stage. Now, to me, Ripple is in pole position. Ripple is firmly intertwined now, firmly intertwined in the treasury regime. That is so important with, with G Treasury and now opening up Ripple Treasury, powered by G Treasury. It's massive. Tell me anyone else in the comments, who else has had the foresight to see where this is going, right? Tether owns more gold now than some countries. They're buying copious amounts of it. They got a vault in Switzerland. They hired some HSBC traders, some good ones, to look after that. But I mean, look where the world is going. I'm proud of everybody who made it to this point in the video, and I love you all. Have a great day. Stay emotionless. Watch XRP closely. This could be a defining moment. Ladies and gentlemen, this content is for informational entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves to never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world distracts you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. You move now, be remembered. This is not the end of the story. This is just the beginning. This opens your eyes. Smash that like button, ring that bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the public. Love you all.